Hey guys, Kai here with Pure Investments. In this video, I'm going to be covering trading timeframes, basically just charting timeframes and why they're used. A lot of the questions we get often are, why do you use a 15-minute time frame for this chart and an hour time frame for that chart and a 4-hour time frame for that chart and so on. And I hope to kind of break it down a little bit more here because it's really a loaded question as to why you use certain time frames at certain times and not at others. And hopefully this video will kind of work to showcase why you'll see analysts using different time frames based on different types of trades. So your first time frame is going to be a short-term time frame. These are going to be your 1 minute, your 3 minute, and your 5 minute time frames. And they're all basically similar into their usage. Your 1 and your 3 minutes are really just useful for scalping and detecting volume spikes. I like to use them a lot for if I see a large volume spike on, say, a 15 or a 30-minute chart or even an hourly chart that kind of comes out of nowhere. A lot of times I'll drill down into a 1 or 3 minute chart. And what that does is it allows me to kind of see buying or selling volume to figure out what that volume is, because a lot of times market manipulators can use that fake volume to their advantage, and I'll try to show you what I mean here in a minute. And then your 5 minute chart is going to be more for short-term trades. Your 5 minutes, your hour, 15, 20-minute buy it, sell it soon. Not quite a scalp, more of like a very short-term day trade. All right, so here we have Bitcoin. This is a 1 minute chart. You can see that up here, 1 minute, 1 minute. And as you can see, this chart is really, it's just not that useful, right? You kind of look at this chart and you think, what is this? There's no patterns really to decipher. It's kind of just a mess, right? But what you can see down here are these little volume spikes, and you can kind of see that this drop here was big red volume, and there hasn't really been much green volume since. Even these little green spikes weren't as much. When, say you go to a 5 minute chart, right? This is still kind of noticeable, but sometimes it's possible to kind of hide this volume drop and kind of make it look like it's big selling volume, and then you would go to the 1 minute chart and you'd actually see more big green candles than you would red. And similarly, right, if we go to like an hourly chart here, you can kind of see that this big red candle here is kind of a little bit hidden because a lot of that red volume was on this candle. And you don't even notice it until you really break it down into the 1 minute. And that's where those charts are useful. Same thing with the 3 minute. It's just a little bit of a better view of it. Sometimes these patterns can be a little bit more decipherable, but for the most part, you're going to see a lot of stuff like these candles where they're just kind of flat and nothing happened for 15 minutes. Basically, Bitcoin just traded sideways and did literally nothing. And you'll see that a lot, especially on lower volume charts, if you're looking at altcoins or something of that nature. So let's get into medium terms now. So medium terms are going to be your 15-minute, your 30-minute, and your 1 hour candle. Your 15 and 30 minute are really just useful for day trading. They're not really useful for anything past a single day, but unlike say a 1, 3, or 5 minute, these are more useful for a buy it and hold it for a couple hours. You might be talking about a 5, 6, 7 hour type of time frame on what you're looking to hold that asset you just bought for. You're going to see a lot better plotting of a chart with a 15 or a 30 minute because the candles are more drawn out. They tend to form better patterns. And then you have your 1 hour, which is really useful. It can be useful for a day trade, primarily just for plotting more resistance and support type of stuff. But it's more useful for a multi-day swing trade. We're not talking 6 days, 7 days, but a 2-day, 3-day type of trade, it can be really useful for that. But anywhere usually from 12 hours on for a holding time frame is what you're looking at there. All right, so here's Bitcoin on a 15-minute chart. As you can see, the pattern's still a little bit weird. You're seeing each candle's 15 minutes. So over the course of a day, you're going to see a ton of candles in that day. But what's primarily useful here is you can find those little dips, right? So you can kind of see here, like you had this little flag earlier in the day and we popped up. And then on this big dip, you can see how this kind of held as support here. And that may be harder to see from a longer time frame. If you're looking on a 4 hour, all of this is encompassed by 2, maybe 3 candles, and it's really hard to see that little support dip. So if you're looking for entry on Bitcoin before possibly it takes off to 20,000 again, you're looking for a little bit of a dip. You don't really want to buy up at 11,500. when you don't really have to, and you can get a better entry down here at like 11.2, 11.3. And then similarly with the 30-minute, you know, it's that same stuff. You can see here kind of in that sense of similar stuff. You can kind of see this support, and it also sort of held the 50 EMA here. And those are just little useful things that you can see. And again, you're going to have things like your Stochar RSI and your MACD on a 30-minute that are also going to be helpful. You know, you can see here where it denied the MACD cross and then came crashing down a little bit more. But if you go to a 1 hour, you don't see any of this. None of this actually happened. You know, as best you can tell, we had this weird little dip that didn't mean anything because all those support levels that I showed you, they're not there. They don't exist. Not as much. You know, it's kind of here, but it's harder to tell. Whereas on the 30-minute chart, it's very obvious. The same thing with the 15-minute chart. It's just very obviously there's a support there. And, you know, same thing, we're going to get into longer-term charts. Here's what I mean about it being on the 4-hour. If you were watching this dip on the 4-hour, you wouldn't have thought about this as support because you only have 2 candles there to look at. You know, you would have thought this was about to collapse. And in reality, it was kind of just flashing down to the 12 EMA, holding this support that you couldn't see because you weren't on a shorter time frame. And that's when those shorter time frames come into play. And lastly, we're going to have our long-term time frames. These are going to be your 4-hour, your daily, and your weekly time frames. You're going to see the primary time frame a lot of our analysts use if you have premium is going to be the 4-hour time frame. The reason for this is that a lot of what we do is plotting longer term trades. You know, we're not often looking for just a quick scalp. Yeah, you can make money on a quick scalp, but the real money to be made in crypto, as most people know, is, you know, buying an asset low, waiting till the bull market comes up and selling it for huge gains. And a 4-hour time frame can be useful for that on a several day type of trade. You know, you can use a 4-hour time frame to plot multiple weeks really if you want. And it's often better than a 1 day simply because you're going to see more support, more resistance, similar to the 15, 30-minute versus the hour. You're just going to see more support, more resistance. A lot of times your indicator is going to be better. Things like Stochar RSI and MACD and Super Trend and all these other indicators that you'll see us use a lot of times they're going to be more clear and concise on a 4-hour than versus a daily, simply because things turn faster on those time frames. And then the daily time frame is going to be really for your long-term holds, right? You're looking to plot something, hold it for several months. That's basically what it is. Weeks, months, that's your daily time frame chart. You're not going to look to trade for 2 days on a daily chart. You're not going to see anything. It's kind of pointless. And a weekly chart, it's not useful. Like, it's not useless, but at the same time, it's really only useful for Bitcoin, Ethereum, and Litecoin. These are really the only coins out there that have enough of a history to make a weekly chart relevant, and you'll kind of see what I mean when I show you, say, an altcoin weekly chart here in a second, because there's not much to see when you don't have that type of history. These are definitely more useful on a standard traditional stock market where you have, you know, things like Apple that have been around since the 80s and they have weeks and weeks and weeks of charting. You know, same thing, there are monthly time frames. They're not useful in crypto. We just haven't had enough chart history to make a monthly time frame useful. All right, so here we have Bitcoin on a 4-hour. And as you can see, this pattern is just a lot more noticeable on the 4-hour time frame versus, say, a 15-minute time frame. Look at how far out I have to zoom. You can't even see the candles. You can't see the length of them. This is all useless. I mean, it's just, it looks like a heartbeat. You know, so this is where you're using your 4-hour, really. It's for good plotting of a longer term trend. You know, if you go all the way back here, this is a month ago, basically. This is, you know, you can see down here, it's February 5th. February 6th is where the start of this new uptrend started. And it doesn't look like that many candles because they're 4-hour candles. You're only going to get a couple of them in a day. Or more than a couple, but you get my point. Anyway, this is really the bread and butter of charting. A 4-hour chart is going to show you most of what you want to see on a chart. And you can kind of see that if you break down any form of pattern here, Ichimoku, whatever it may be, MACD, RSI, your 4-hour chart is going to show you more than most of the charts that we've gone over so far. Again, similar to what I was saying about the shorter term time frames, just basically what it boils down to is a longer term time frame is going to be more accurate for plotting things like moving averages and exponential moving averages and basically any type of indicator, right? So when you go into a daily chart, though, this is going to be your strongest chart for looking at longer term resistance breaks, right? So if let's clear all these out just for viewing purposes, right? So here's our daily chart, okay? And there's something that you can kind of see on the daily chart that's a little bit harder to see from, say, a 1 hour chart, simply because you have to zoom out so far. The pattern isn't really as noticeable, right? But say you zoom out until the daily chart, and what you kind of start to see is other patterns. Similar to everything else, you're just going to see different patterns form, right? So you kind of can see this, just as an example, this inverse head and shoulders that's kind of begun to form on Bitcoin, right? And this wasn't obvious on a 15-minute chart or a 1 hour chart even. It's obvious when you get into this 4 hour or daily chart is when you start to really notice these patterns open up. And the reason for that is basically because this is what most traders use, right? The majority of traders out there are not looking at a 15-minute chart because a lot of them are not scalping coins, and that's basically what you use those charts for. So yes, while they're useful, the shorter time frames for finding little support dips if you're looking for entry on something, what they're not useful for is these long-term patterns that we're kind of observing. You know what I mean? So you wouldn't see the ascending channel as well on anything besides the 4 hour or the daily because it's just too much to look at. Similarly, you wouldn't notice that, MACD and RSI and all these other things are where they are because on a 15-minute chart, you can kind of see what I mean here. Everything's going to swing around like crazy. You know what I mean? In the matter of a day, you're going to get 5 or 6 dips down to 0, Stoch, and 5 or 6 rises up to 100 on these shorter term time frames, as opposed to a 4 hour time frame where you may only see one of those dips a day, maybe even less. And that's kind of how we break these things down. Weekly, I can kind of show you quick. I don't want to go too far into it, but basically this is the weekly chart, right? There's not much to plot from it. You could basically just see the parabolic curve of Bitcoin, and that's basically all you get out of it, right? You see this huge parabolic curve and not much else. You can't really plot support or resistance here. There's not much to look at in that regard. I mean, you can see things like this where, the 50, this is 50 EMA held on this daily candle. Yes, it did dip below it for a bit, but once the weekly candle closed, it did actually close above this 50 EMA, and this kind of held a support. But in general, if I were to show you, as I kind of said, let's pick a random altcoin. Sure, Stratus Coin. What does this show you? Literally nothing, right? There's nothing to see here. Any of these coins you're going to click on, here's DGD. It shows you a straight line at a 45-degree angle. That's about it. Salt, same thing. It doesn't really show you much. There's just not a lot to see on these altcoins because the weekly charts really only go back to maybe November. Even if they go back to June, say, there's just not much there. Whereas on Litecoin or Ethereum, there's just a little bit more. But at the same time, you also see these crazy wicks where something happened with Coinbase and it tanked this far down somehow. How, I don't know, but you kind of get the point. The weekly chart, for the most part, is kind of useless. It can be used to plot certain things, but in general, it's just not going to be a chart you're going to utilize for the most part. And that's about it. To kind of summarize, basically you're going to use the shorter term time frames more so to confirm your suspicions based on the longer term ones. So your primary time frame that you want to watch is a 4 hour time frame, and you want to use your hourly, your 30-minute, your 15-minute just to confirm what you're seeing, right? Just to maximize and min-max your entries and exits. So you may see that the 4 hours kind of getting topped out right here. You can kind of see that on Bitcoin. It's topping out a little bit right here. Everything looks like it's maybe about to dip. You see MACD curling down a little bit, Stoch curling down a little bit. Then you swing down to the 30-minute, right? And you take a look at the 30-minute and you go, oh, wow, yeah, look at that. MACD crossed down. Stoch is curling down again. maybe it is time to take some profit here and look for re-entry somewhere lower, maybe around 11,000, right? Because you see some good support here, and that's kind of the usefulness of different time frames. Me personally, I flip-flop between 15, 30 minute, 1 hour, 4 hour on every chart I look at, because they do all have their use. But what you don't want to do is sit on a 5-minute chart and try and trade it all day for longer term holds, because you're literally just going to drive yourself crazy. You're not going to see patterns. You're going to think you see things that you don't see. And in general, you're going to end up losing more money than you would just literally setting your chart to 4 hours and never removing it. Because I can guarantee you, if you learn to just trade on a 4-hour chart, more often than not, you're going to see gains off of it, because the patterns are so much more reliable than they are on a shorter time frame. And that's about it, guys. I hope you enjoyed this video. I know this is something a lot of people have been asking me questions about, so I hope it has a use for you guys. And I'll see you next time.